Here in Marty, Missouri. Good afternoon. The 20th of April, 2016. I am going to do this one much quicker than I have of late. So let me just kind of talk to you what I believe is the push and pull on the market. The push being the stuff that's pushing the market higher, and the pull, the potential things that could pull us back and maybe consolidate at a lower level. On the bullish side, I've been talking about breadth. Right now, all of the 10 sectors in the S&P 500 are trading above their 200-day moving averages. That's very strong breadth, and that says good things historically about at least the intermediate term outlook for the market. Very strong indicator there that this rally is for real. Sentiment is rising off of very low levels. So shorts have had to cover, cash has had to come in. People are feeling better about the market, and I think that's attracting new money to come in and buy stocks and bid them higher. Commodities are rising, and we'll see how long that lasts. But there's I think when you look at shuttered capacity, and of course, obviously in oil, you look at the slowing of the storage builds in the oil complex. You look at a lot of lower rig counts, as I said, shuttering of production. You get to a situation where traders are going to begin trading the commodity higher. There is a great deal of skepticism around the price of oil and whether or not it's going to test. I listened to a very popular oil analyst today say we're going to go back and test those levels below 30. I don't know. I don't know. I think I can make a case either way. So time will tell. The Fed has been very dovish. They have really walked back their hawkishness from December. And so the market is anticipating a lot less in terms of Fed rate increases than it was at the beginning of the year. The dollar, with the exception of today, has been down. It was up a lot over the last couple of years. It was a real headwind for multinational companies and to some degree a headwind for the economy. That is now a tailwind. April seasonality. April historically has been the very best month of the year for stocks. So I think that can draw money into the market. Easy earnings beats. Earnings estimates are so low. They're going to have a majority of companies truly are going to beat earnings. We've broken above resistance levels. I'll get to the chart here in a second, but you notice we've really gone through lines that I just decided to get rid of because we're no longer contending with those at the moment. And then manufacturing, lastly, is improving, at least anecdotally. The pretty much the majority of the slew of manufacturing surveys of late have shown the kind of improvement in that sector that we haven't seen in a long, long time. So that could be a good source of optimism for the economy after we get past what's going to turn out to be a very slow first quarter. So those are the things, or at least a lot of the things that I think are bolstering stock prices at the moment. The pull, the things that can get in its way. Valuation is getting rich, no question about it. 19 times last year's earnings or trailing 12-month earnings, 17 and a half times what this year's earnings are anticipated to be. That's not bubble-icious, if you will, but it's higher than average, and it's a source of concern. I don't know that we can get the kind of expansion in price to earnings ratios, they call that multiple expansion, going forward that would take us much higher. I think we need to see earnings go up, and we've actually seen profit margins kind of roll over. I can take longer and make a case that earnings get better going forward, and they might. We're certainly seeing some very hopeful trends in some of the key sectors in the economy that does suggest it's going to pick up, and therefore earnings are going to pick up. So we'll see. We'll see how that plays out. Sentiment is rising. I mentioned that as a good thing, but it can also be a bad thing. If the market gets, or traders and investors get too bullish, that becomes a counter trend or a bearish signal. Skepticism over oil, which I just kind of talked about, that could be something, if the skeptics are right, that drags on the market. The Great Britain referendum on June 23rd, I see that as a potential big deal. I just read an article that talked about the polls, and while better than 50% would be against it, it's a pretty close race at the moment. We get close to June 23rd and the jury's out in terms of whether or not Great Britain would actually leave the European Union. Folks, that has to be a real source of volatility, not just for currencies, but for equity markets as well. May seasonality. You've heard the old adage, sell in May and go away. If we continue to move up like we are, there may be some real profit taking in the short run as April closes out. And then lots of technicals, some supportive. A lot of them are getting better. Certainly these price movements above resistance levels and then turning them into support are positive. But then you have things like my MACD line, which I keep pulling up, which is beginning to improve. We start pushing above and create a higher high, then I'm not going to be talking about it as a bearish signal. It still is at the moment. The slope still goes against the slope in prices, so that's been a pretty decent indicator in the past. So that's a reason to think, technically speaking, that some of these other things I'm talking about are beginning to weigh on the market. This bar for today, you can see the high, you can see the low. The left is where it opened, the right is where it closed. The S&P was up like 1.6 on the day, and it was up 11 points, and the Dow was up over 100 points, and I think it closed just above 40. So we have made it through this line for the moment. I would say tested it twice and succeeded. This one here is really the last downtrend line connecting the May all-time high, and then you get to the May all-time high. Those who think that this rally is for real, it's going to keep going, expect us to break right through there with some momentum and then find that as a place of consolidation before we move into higher highs. Very well could be the case. Remains to be seen. I wouldn't try to time this market, but I would expect, but I've been saying it for some time now, I would expect to see some consolidation after such a good run. And I do think there are some things that would make sense to bring that into play. But for now, the trend is to the upside, so we'll enjoy it while it lasts. Thank you, folks, as always, for watching and listening, and I'll talk to you again very soon. Bye-bye.